This session, the network effect, unlocking new opportunities through network interoperability. So here on the theme, actually, there are keywords. The first one is network effect. By definition, it is a phenomenon whereby increased numbers of participants improve the value of a good or service. In economic terms, is often found in a two-sided market. Suppliers on the one side, clients or customers on the other. So in which once you achieve network effect, you may have constant or rising returns with decreasing or zero marginal cost. Now here, as the theme suggests, it means faster, cheaper, more transparent, and accessible end-to-end global payments. Can we achieve them all at once? The keywords number 2 here is interoperability, achieving network effect through interoperability. Why? How? And what is it? That's our focus today. So here we have Brant, Chief Payments Officer of NatWest. Welcome. Alexandra, Chief Payment Officer of Nium. Maha Dimachki, Singapore Center Head, BIS Innovation Hub. Sergey Nazarov, co-founder of Chainlink. Welcome to you all. This is a very good mix of speakers from commercial bank, from the central bank of central banks, fintech, global payments, and technology provider that enables cross-network operations. So first question to all of our speakers is, what is in your mind when we talk about network interoperability? Why it matters or not? Where are we? So I did 2 to 3 minutes for each. I think this round we start with Mark, who has decades of experiences in payment ecosystems, now at NatWest, but also in the past at ParentPay, American Express, and PayPal, leading his team to serve large customer bases. He has long-term strategic view. Please, Mark.
Thank you. I think kind of what's at the top of my mind when I think about interoperability, it didn't appear as one of the options is resilience. As a part of the UK payment infrastructure, we're critical national infrastructure. And so with interoperability, you've got redundancy built in. So you've got the ability to ensure that you can be always up. And when one of the networks is a problem, you're able to switch it between channels. So I think that's kind of the top priority from an interoperability perspective. But beyond that, I think the opportunity to innovate, we're all operating on the same standards, then it means that it's just a much more level playing field. You've got the opportunity for both banks and other players to innovate because we're all working from the same tool set, the same skill set.
Sure. So as Nium, the company I come from, so Nium is the leader in cross-border real-time payments globally today. We're working towards becoming, the largest payment network that exists globally, and interoperability is key to that for us. So to see greater scalability and reach as the most frequent answer on this question is not at all surprising to me, because that's exactly where we sit as well in our thoughts. But everything else you see here is still a benefit. I think the point here, the biggest one, is around greater scalability and reach, and being able to truly have a global interoperable network of payments where, a payment cross-border starts to feel more like a text message than it does, a difficult payment with many layers and many complexities that you have to manage. And if you think about, maybe just as I get into this discussion and take a step back, thinking about what interoperability really means, it can mean a lot of different things, right? It can mean communication between payment schemes. It can be partnership with different partners in the ecosystem, banks, tech companies, fintechs like us. It can be interoperability of different languages. So talking about ISO 20022 and how that plays a role across different schemes and creating that interoperability. For us, for example, we've just, to plug real quick for us, we just made an announcement here at Sibos that you can actually now initiate a payment to Nium via SWIFT. So you can use the Swift messaging service to send a transaction to us to reach the network of 220 plus countries that we can reach today, over 80% of which you can do in real time. So that is just, I'm sharing that as another example when you think about interoperability. It's about schemes, it's about systems, it's about languages, it's about tech. It's about how all these things come together to, again, make a cross-border payment feel more like a text message than it does the difficult payment.
The cyber.
So,
Thank you. I'll start by saying it is a small sample that has contributed to this. Thank you all for being here. But I still think it's representative. I wasn't surprised by anything in particular. I think where there were the fragmentation, the geopolitical risk sort of posing fragmentation, etc. Some people thought that there might be an opportunity. It's really interesting to hear kind of what that opportunity is and how they're thinking about that. So that kind of didn't surprise me. I thought I was just curious with whilst a low score, but more of an opportunity for payments, 29%, I thought was really interesting. I also thought that the question where we're looking at the frictions in regulatory standards or the regulatory burden, if you like, versus lack of collaboration in standards, and the lack of collaboration in standards actually won. That's it there.
Yeah.
By a margin, I would have thought. I feel like those two go hand in hand. So, when we talk about standards, who enforces the standards and how did that work? And I wonder whether there is sort of a connection between those two. So, interesting, nothing too surprising, but I think quite a lot of room for a bit of conversation around some of these thoughts. What's on my mind, I think actually very similar to, what my fellow panelists have mentioned, particularly around defining what interoperability actually is. What do we mean by it? I think we tend to think, everybody thinks about it as one thing, and it might be unique or different to how others think about interoperability. And, there's many examples of what that looks like. I think we have to think about all of these things, particularly as we're looking at, cross-border payments, infrastructure being built and developed. How do you look at interoperability by design? How do you make sure that domestically your systems interoperate on a domestic level, on a, even within an organization? But then you have to look up and see what others are doing. And how do you build an interoperability into that? So I could take an example of, one of our key projects is Project Nexus, which links faster payment systems on a multilateral basis. If you take that as one example, how do you think about interoperability within a domestic structure? What are your partners doing? How do you potentially in the future want to interoperate with them for cross-border payments, the interlinking? But crucially, how are you also thinking about new technologies that are emerging? So whilst you're using existing technologies, and we're seeing a lot of momentum around new technologies in this space, how do you interoperate with that? Because coexistence will happen. We're not going to substitute overnight. And so that this question of interoperability to achieve network effects or anything else that we want to achieve, has to be, we have to really think about all the different layers. Then there's technology when it comes to interoperability, and then everything else. And we need to, think of interoperability for standards and rules and regulations and harmonization and data sets. So there's a lot more than just the technology. I think we fall into the trap of technology being the layer of interoperability, and it's not always easy. As we've seen with ISO 2082, taken a while for all of that to. But then there's a much more complex layer on top of that, I think. And so that's another sort of angle that we should be thinking about when it comes to interoperability. So that's just a snippet of what's on my mind, because there's a lot more on my mind when it comes to this topic. But I need to stop there.
Yeah, thank you. We had question about technology and later. Sergey, please.
Yeah, so from my point of view, what is the biggest benefit of network interoperability? And the closest answer I agree with is the greatest scalability and reach. And reach, I understand in my world to mean liquidity. So I think the network effect definition we gave is accurate to what the value of interoperability is. The more kind of counterparties you're connected to, the more customers, the more purchasing power, the more liquidity, the more valuable a system is. basically. I kind of exist in a world where a lot of the value from the traditional TradFi world is now starting to migrate into what's known as the blockchain format. And there's an early stage kind of determination right now around what will be the global standard for how to interconnect all the different pieces of value and the counterparties on all the different chains, which is what we work on with something called CCIP, this cross-chain interoperability protocol. So I'm pretty familiar with how all of this network effect stuff works. But really, I think it just boils down to liquidity. And so how much purchasing power, how many users, how many institutions does the interoperability solution that you offer really connect you to that actually would do a useful transaction with you, right? So there's a number of counterparties that an interoperability solution can connect you to that you would never do a transaction with. That's sort of valuable, but not really. I think the real value is what interoperability standard or solution connects me to the most counterparties that I could actually do a transaction with in a valuable way. That's kind of what I think about when I think about the value of interoperability and network effects. So that's really where Swift has done a very good job. Now there's a lot of transition to blockchains, and it's kind of still pocketed in different geographies. There's different leaders that interconnect each specific geography. But I think as all of those leaders eventually transition onto a blockchain, all those different blockchains will all get interconnected, and it'll be just one big, what we call Internet of Contracts, interconnected across all those different places. So I think eventually we're just looking at like one big network of all the different payments and payments providers and asset issuers. That's where we're going to end up in the next, 10 years. At least that's what I'm working on.
Right? Yeah. So value migrating to on-chain, right?
Yeah, that's pretty much inevitable at this point.
Yep. So now we know what are your emissions for interoperability. But meanwhile, we know closed loop system, like including payment system, have been there for decades. It's not secret. So taking back to the physical world again, in recent days there was a bull run in the Chinese stock market. Then our latest issue on Caixin Weekly has reported that regulators are actually a bit worried that some of the retail investors actually they are getting consumer loans and the small business loans and back on the stock market. When I read this story, actually, I was a little bit surprised. In a time when every step of my move can be traced by the app on my cell phone, but if I'm getting a loan from Bank A and withdraw them out into cash, put it into Bank B, which is linked to my stock trade account, nobody really can stop me. Putting aside if that should be allowed, right? So my next question is, where are the chokeholds, the holdouts of interoperability? Why are they still there, and how to get rid of them? This round I will start with Alex. You just said, right, Nium just announced the partnership with Swift. And even before that, actually, from your website, I saw using your network, we can receive money in 15 currencies, pay out to 270 markets, and manage foreign exchanges in 120 currencies, including CNY. So after that would be even easier, right? But the question goes to you, the chokehold, the holdout.
Yeah. I think there's maybe two questions to answer. One is, why are we here? Why is this a challenge today? And why is it difficult to get to the point of interoperability? I think there's a few reasons for the why we're here today. One of them is simply competition, right? Some of it is people want to establish their proprietary, whatever it might be, network, technology, tools, etc., right? And your example with banks not being able to communicate is a good example of that. I've come from a banking world. I've worked for 2 global banks. they are very competitive. So there's that piece becomes a part of it. But I also think, especially when you start to think about the networks that have been built. So in my world, we looked obviously a lot at the real-time payment schemes globally. They weren't built with the thought of interoperability. They were usually built to solve for very localized problems. Being able to bring people into the financial system in some cases where there's a lot of the unbanked, moving to digital within their own market, right? They weren't really built in mind to be able to move within other systems. So that's kind of why I think a lot of the reason we're here today is how it is. But as we think about going into the future, I think the question that was asked, I think the number one answer was lack of collaboration as one of the challenges in order to get to interoperability. And I do agree that that is a major challenge, but maybe even just to touch on something you said, Maha, that all really does oftentimes get driven from regulation. Regulators, either they make the rules, they drive the innovation in a lot of cases. If you look at the success and ubiquity of some of the schemes that exist today, it's because it's been driven by the central authority, the central body, the central bank. I come from the US, so I talk a lot about how we have a challenge in our market because we don't have that central body that's pushing the innovation, that's pushing that move toward real time, toward interoperability, et cetera. And that we see the difference in our fragmented market. We have two different RTP systems that don't connect to each other. We have ACH, we have wire, we have all these different ways you can make payments, but none of them talk to each other, just even in our local market. So I think there's a lot of factors as to, what some of those challenges are to move forward. But I think if there is more support from the regulatory bodies globally, and they start interacting with each other and they start having these discussions about interoperability, I think that will really start to drive things forward.
But competition mindset, and maybe we need bottom up. If the regulator does not doing their job well, Maha, please.
So, Alex is stealing a lot of my answers.
You'll go first next time.
And I like you very much because you validated some of the thoughts that I've already put out there. If we take, so I'm not going to repeat what Alex said, but I do want to talk about on an infrastructure level, some of the motivations behind this. I think, governments or central banks will look at what is needed for their domestic markets. And everybody is then moving at a different pace based on the strategy for that market. So what we're saying is actually think about what you're doing within your domestic market, but always look at what your partners are doing, what your trade partners are doing, what the world is doing, and ensure that you are designing for that interoperability, particularly on a cross-border level. So that's one thing we encourage, and through certainly our projects at the Innovation Hub, we try to encourage that because it is a lot about more of that global nature of that collaboration and how do we kind of design interoperability. I think if we look at a paper, the FinTech paper that was put out, a vision, it is a vision for a future financial system. It talks about that. Now, so that's something that I think we need to constantly encourage. The other part of what the BIS does, and this is about sort of thinking about the global standards, which I kind of want to touch on. So some of our committees, whether it's the Basel Committee, the Committee for Payment Market Infrastructure, or the FSC, they put out these global standards, and they monitor them and they push them through and everything else. In fact, the FSC report on adoption of ISO 2002 and the G20 targets is out. It was out last week. So this is all great, but you always need the local regulator for applying these consistently. And even when they apply them, it's not always, exactly the same. It's not always harmonized. If you take the Second Payment Service Directive and the implementation of that, it was meant to be one directive across all of Europe. Everybody implemented it slightly differently. So, it's quite difficult actually to kind of try and drive complete consistency and complete harmonization, which we might not be able to get to the platform, one platform that rules it all, in my opinion, because you do have these cultural, historical regulations, rules, laws that exist in various countries that we must respect. And global standards are great, but there continues to be the challenge of local implementation. And so how do we constantly think about pushing towards a harmonized future, but respecting local jurisdictions and their laws and regulations? And with that, I think technology can play a really important role here. There's a lot of technologies that are emerging around things like zero-knowledge proofs and privacy-enhancing kind of technologies and so on that we can take advantage of to be able to achieve interoperability while still respecting those differences. I also think that we should be okay with a number of different ecosystems emerging. That is good for resilience, I think, and then look at how they kind of connect and operate together. So a future that is one thing that rules it all, I think is not necessarily going to happen. I also think it's not necessarily needed, and particularly the resilience point is important in this case. That's why I think constantly talking about it, I call it the interoperability imperative. We must always think about how we do this. And interoperability means that you can connect and you can switch things off. So we must always think about, we need to get real with this stuff. There's a great vision of what we can do, but there's also the reality of how we need to implement it. And I think constantly talking about that and asking the hard questions.
Harmonious, but not this law, not a single one, but three people have based on that.
Yeah, so I think we're kind of saying the same thing, but I just want to make sure we're like aligned on what we're doing. So I agree with you. No one's going to use like a single blockchain. No, everything's not going to be happening on one chain because the technical properties of that and the fragmentation regionally is just too great, right? So it's just like you have many different database technologies and many different information routing technologies used privately. You then have a single, I don't know if I'd call it platform, but I guess I would call it a technical standard, creating the internet, right? So the internet is a set of standards for information transmission, right? The internet is information technology as a trend, right? So TCP/IP, HTTPS, SSL, like very basic protocols that allow, in that sense, there is a single standard that interconnects, I use one database, you use another database, and you can use yours and I can use mine for whatever reason, but then our databases talk to each other across a single globally connected protocol. And if you make an application on the internet and I make an application on the internet, we can make it in different languages and different stacks of technology, but it's all on one internet, right? And that internet is the information technology thing, right? IT is information technology. So all I'm really saying, and I think a lot of what this internet view is saying, is now there's value technology, basically, right? So information technology doesn't do a very good job at transferring value. It has all these problems with transferring value. And the transfer of value over information technology has all these errors, delays, fraud, all of these, fraud in payments is a huge, it's trying to transfer value because value can be viewed as information, but it's kind of doing it only to a certain point. And I think what I'm saying in relation to the question is, I think the technology stuff will be solved by a single set of standards like TCP/IP created a single internet. So there'll be a single internet of contracts, internet of value on a single set of protocols that connect all these different chains. I think the biggest hurdle to that in the traditional markets is regulation. In the non-traditional markets, it's permissionless innovation. And eventually the non-compliant world and the compliant world will interoperate also on that single set of standards. And then all this stuff about collaboration is usually just a problem because there isn't a certain threshold being met on regulatory clarity and enough easy to implement technology, right? So I think all the collaboration stuff will go away as the cost and complexity of collaborating goes down and as the economic incentive to collaborate goes up. Like there's more assets on a blockchain, so there's a reason for us to transact with blockchains. There's more stable coins on a blockchain, so there's better and better payment systems on a blockchain. great news. Like, we have an economic incentive to go over there and actually participate in that. So as the economic incentives go up and the complexity goes down, I think everyone gets on their own chain, and everyone then interoperates over a single system across those chains. So I think we're more or less in the same area where it's not like everyone's on one chain, but everyone is on different chains interacting with each other over one protocol because of the whole liquidity thing we said before, where it's a winner-take-most or winner-take-all situation with liquidity, just like it is with information on TCP/IP. Let's you and me try to make a website outside of the internet, not on TCP/IP. It'll be like a crazy idea, right? It'll be like, I'm going to launch a website that's not on the internet, and everyone will join my internet, use my website because I'm so great. Like, that's never going to happen at this point, right?
Yeah.
Like, that's where we're going with how value is transacted.
Actually the protocol, the basics that you build on them, right? And just leaving the rest by the market forces. They will see the benefit, they will come, right?
My fellow panelists have covered a lot of ground in a lot of detail, which is really useful and also applicable. But if I kind of bring it back to the basics of some of the blockers to this, is at an organizational level and at a market level, you've got cost, you've got competing priorities, you've got roadmaps that don't necessarily align, and interoperability is all about alignment.
Yep.
So you can't, and payments is a network business, so everyone has to be operating at the same standard in the same way. And every business and every market is at different levels of maturity and at different levels in the technology cycle. So it comes down to cost, comes down to priorities and roadmaps. And it's not easy to get all those things to align. But the technology, I'm sure, exists in lots of different formats. But the ability and the capacity to be able to implement that is something which is a challenge for all of us.
Yeah, so that it goes to our next question, how to solve these questions by technology, new technology. What are the technologies, tools, or methods to enhance interoperability, including those that bridge the gap between the existing and the emerging network? Also echoing our theme, what new opportunities will these new tech and the tools unlock? This time I will start with Sergey. We know Chainlink is the computing platform, like I still call platform, that enables cross-network transactions. You said in interviews that all transactions need data, connectivity, and compliance. And all the problems come from this way. So how technologies and these matters and solve problems about them.
Yeah, so I think what I'm seeing in the world that I inhabit, in the kind of the blockchain world, is a transition of value into the blockchain format as the superior format for transacting value, whether that is asset value like securities, or whether it's payment value like stable coins or whatever. Eventually, all of the value will be in the blockchain format because it's more secure, it's more efficient, and it has less errors that are very costly. That being true then creates issues around how do you get all the relevant data to comply into a blockchain, and how do you get all of that value to execute in like a DVP transaction, right? So how do you do delivery versus payment when you want to trigger payment in exchange for an asset or a security? That starts to become a problem of the asset is on one chain and the payment method could be in an off-chain system like Swift, or it can be in an on-chain system like a stable coin, or in our case, you could even instruct eventually a stable coin through a Swift message. But the point is, if all the value, if the blockchain format is the superior format for all value, all securities, all ownership, all payments, like if that's true, and it seems pretty clear that that's true at this point, then you have additional questions of how do you get information into those transactions to allow them to comply with identity, KYC, travel rules. How do you create a unified golden record that can be used by regulators, counterparties, the payment initiation service, whoever? And then how do you connect that payment and that asset transfer across chains? technically these are all solvable problems. And, to the point that was made a minute ago about priorities and all that stuff, that's like a super valid point, and you're absolutely right. My view on that is that as more value migrates into the blockchain format, the economic forces will shift the priority towards that. And once again, that'll be very similar to the internet, right? Where at a certain point in the emergence of the internet, you were on like telex machines, and the internet didn't matter. And then you got on faxes, and Swift is emerging, and it's like, do I do faxes? Do I do Swift? And then eventually everyone is like, hey, I need an email. And you don't really have a choice about having an email. It's not like you can tell your client, I don't use email. You're going to need to call, your secretary is going to call my secretary, and we're going to set it up here because that's, because I'm back in the 1920s. Even if you don't have an email, you just say, yeah, I'll send you my email. And you call the IT department, you say, I need this email thing today. And then everybody's priorities become super duper clear because having that email is related to like a multi-billion-dollar deal. And and there you go. Everyone's priorities are super aligned because you need email to do that billion-dollar deal because that's what the guy wants to do on the other end. That's like what he needs. This is going to happen. That's it. So everyone's going to get super aligned from that point of view. And then the challenge is, how do you make the transactions work technically? And all the compliance and all of the regulatory stuff isn't going away. So then how do you make that work? That's kind of the question we work through. So that's how I think it all evolves. And that's where I think it's going.
Great. Wow.
So I certainly think that there's a lot of evidence behind blockchain. I think where you could see the benefits of that, everything we're seeing, agreeing with that point. And I also agree with the point on the regulatory frameworks and the legal frameworks around this. They need to be sorted. And there might be a little bit of a catch-22 here of migration of assets onto blockchain platforms, maybe waiting for regulation and vice versa. There tends to be a bit of a circular relationship there. So the sooner we can start to work with some of these regulatory and legal frameworks, I think the better. From our perspective, because we really, what we do at the BIS Innovation Hub is we look at new technologies that can, working with central banks, that can solve some of these problems within existing structures as well as new structures. And we think that there are policy technologies that can start to solve some of these frictions that exist in the cross-border transaction landscape, the payments landscape more generally. And one of our projects, Project Mandela, is looking at, kind of decentralized systems to actually solve for that. So encoding compliance requirements into a protocol layer and automating, therefore, and streamlining compliance processes where, a bit of information on the transaction exchange between the banks will give you what type of compliance you need to do. You perform the compliance, then it gives you a compliance proof, and then that attaches itself to the transaction. That can work with the SWIFT message, and it can work with, a digital asset, and it travels with the transaction, right? This is phase one. Thank you for the thumbs up, but we're only phase one. So we do think, and this is because of zero knowledge groups and privacy preserving technologies, even kind of sharing data without actually sharing the information can start to happen. And this is how we start to break down some of these issues, and we really need to be moving quickly with this stuff because, we want to realize the advantages of, new technologies such as blockchain, but we also need to make sure that we're doing it in a safe way, but in a speedy way. So we think that, from our perspective, we think that, I keep talking about this coexistence, we do need to think about how new technologies and blockchain technologies and so on can actually help with existing frameworks and taking out the friction on existing frameworks, as well as, working with future. And a lot of what we do is modular because we know that these things are happening together. We can't ignore what we have today. Massive infrastructure, critical national infrastructure, it's not going to go away overnight. So we realize that. And so modular sort of projects and making sure that they work on both platforms is important. But we think that there is going to be a drive towards that sort of, blockchain tokenized world in the future. And again, that's the vision of the internet. So, we just got to keep working on it.
Yeah,
Together.
Yeah,
All of us.
thank you so much, Maha. Actually, we need to be sharp on time. Actually, we will be preparing for a round of standards about regulatory, regulations. But you've been so good at explaining that already. You've been with you yourself as the regulator, and now you help startups and teaching them to be compliant or bear in mind the regulatory framework at the very beginning rather than later on at the burden. Yeah. Alex.
Okay. So I believe very strongly in the value of DLT blockchain technology. I mean, in particular, I think from treasury movements, it's incredibly valuable. I think the visibility, the transparency, the security that you get from that is absolutely fantastic. I think the challenge is it has been around for a while. The ubiquity, the adoption, we've seen many CBDC pilots come up. So far, nothing has become the useful tool for this interoperability that we're discussing yet, right? So I think, we have to think about this in the way where if we really want to have interoperability from a global perspective, you have to make it easy. You have to make it something that is understandable, use existing systems. I think, we've talked about ISO 20022. I think that's a huge first step. We're all speaking the same language. That gets us there, right? That's the first step in the right direction. I think the things that Swift is doing, Swift is the messaging platform of payments, right? They've traditionally been known to do, large volume wire transactions, but they are evolving, right? They're evolving to now work with partners like us where they can access real time, where they can access wallets using the same messaging platform. So when we're talking about it from a payments perspective, that's an amazing way to kind of start that journey of using the tools and the resources that already exist to try to bring systems together. And I agree 100% what was mentioned by Maha and I think by others. There's not going to be one single system that everybody's aligned to, that everybody's agreed on. What we have to be careful about is that we don't continue to build systems on top of other systems where then it just creates more complexity around creating more things that have to interoperate with each other. I think we have to look at the landscape as what it is, try to think about that future look, like Maha was saying, for there's countries that aren't there yet, right? They might not have the sophistication of their payment system yet. So they can kind of be that forefront of how we think about those future technologies. Then how do you bring everybody else along into that same system is really, how we have to think about that. And I think some of the technology exists, to be honest, whether it be blockchain, whether it be ISO messaging, whether it be a company like us who's just simply taking and bringing all the pieces and plugging them together, sitting on top of it all, right? There's a way, and it exists. Yeah.
Yeah, have a bigger open mind. Yeah. Mark, I'll give you the closing remark.
I think I share a lot of what Alex has just been talking about. I'm not a deep technologist. I do know that whether it's now, whether it's in 10 years' time or 20 years' time, there will be technical solutions. At the moment, we're talking a lot about blockchain. That may well be one of the solutions towards interoperability at the moment, but in 20 years' time, there'll be another set of technology we'll be talking about. But what I encourage everyone to do is think about the outcome. And I love the way you talked about making a cross-border payment as simple as a text message. It's a genuine outcome. If you've got the outcome clear, and people get behind it, and there's a genuine value proposition behind it for all stakeholders, then you'll find the technical solution for it. And you can go on from that.
Yeah, great. Yeah, so it's about technology, it's about framework, standards, but most of all, it's about mindset. It's the way you think. Thank you so much for sharing these insights with us. We are exactly on time. Good. Thank you.
Thank you.